Good morning, 6:07 a.m. Pacific Standard Time. Date is 5/16 of 2012. What's good about today is that we're in a monthly options expiration, and 5/16 is the date. Okay? We are going to be trading and executing within the upper end of the resistance price ranges. Once they hit, we would be looking for the price volatility increasing to the downside. So you make a high, but then you reverse $7. That would be a normal trading range in price volatility, and it would be the verifier that the 615 call that expires Friday, do they go worthless on Friday? And do I short those on Friday? We'll find out. But it doesn't matter which one of these strike prices. It means that everyone's getting all in on this side of the market, on the call side. There is 3,300 contracts traded yesterday on 5/15, right here. There on the 610 call, you had 4,184 jumping in. And in the short time frame, it's getting what we call inflated in price. And that means that the higher that it goes, that on Friday, if Google's closing below 610, all of this money goes zero. And same thing with the 620 call. And I'm going to pull up that 620 call because it's an important one, because I may be on Friday, and we'll let one see, they're bringing this one up, and if I short this call and it goes to zero because Google would close below 620, I'm a market maker. I can do that. Public can't, but I can. And the thing of it is, come Friday, I'll tell you right now, if you can't close above 620, that means I'm going to be shorting this down. And that means if we go up and hit resistance levels at the higher top part of the range and roll over, that means that these are going to peak in their price. And yesterday's high, here's an example. Yesterday's high, 370, and the low, $1.40 on a 620 call. So that means that within the price volatility, with the time remaining in the expiration, that you would see that this side of the market goes worthless. This side of the 615 calls by Friday as they inflate them. 590 was on the high yesterday. Let us not forget what the highs were and the ranges. That was $3.55. But look at the 610 call, $5.10 range. Right here, yesterday's range. $5.92 range on this 560 Apple call. Let's take a look at the 555 call. Time is 6:10 a.m. Pacific Standard Time, 5/16/2012. Time to get those limit orders out there in the marketplace. What does that mean? Start getting your systems ready, fire them up, and start placing the limit orders. And it's based on pre-market gap. And it's about having those limit orders out there. But what side of the market? Watching this 620 call like a hawk. Okay? Now, them covering that side of the tape. And in price volatility, that you have the $7 reversals in price volatility. But they work both ways, to the long and to the short. But where is Google going to close? You only got 5,000 shares. That could be one buyer or seller right here. Yeah. So they've been walking the futures up. But once they do, is where that reversal comes into play. And it's verified with that half bar. Okay. So price line, another trade that's just been a sweet darling. It's been coming down yesterday. It's been making a bottom off of those earnings. I was short at 775, and I have all the proof in the world because I said it had to retrace $100, and it has. And it's putting in a bottom. And it has very little volume. And when I teach people how to trade low volume, this is free market. Yeah, it is. Futures are up. Let me tell everybody. Because S&P is up 7 handles right now to 1335.30. The Dow is at 58 handles to 12,662. Nasdaq futures, once again, 25.92 up 13.8 handles on the gap. And the opening bell is in 18 minutes. And we are going to train our new MMT market makers using the electronic market making system. And what is that? Well, one of the things, if you go to stockmarketfunding.com homepage, you can see right here, ultra high frequency trading platform. One of the things that the public has a disadvantage to is the manipulation in the price ranges. And we're on your side, believe me. That's why we built this, so that you could have true and accurate honesty between the buyers and sellers. And just remember that standard deviation technical analysis are manipulated in the high frequency transaction model, because once it moves them, then the general public makes their emotional transaction. And we just want to point it out to you that it's things that the public needs to know about. Okay? And we built this platform so that you would know within the Diamond Alert, and this is live right now in pre-market, but we want people to know that that Diamond Alert resistance level, and they start sliding at 2 teenies and a follow-through bar on reversals, using the platform will peg the high end of the move and or the actual price range. Could be $3 up and down for a period of time in both sides of the market. So it goes up $3, comes down $3, just depends on what our system says. So we want you to know that. And ultra high frequency trading platform is used in the pre-market setup, and how to use this platform to get the bottom low price and get a $10 burn off of that bottom when you're trading that price line as it puts in its low price action volatility. And that you're taking this Apple trade and you're working with this Apple trade. You're working with the monthly expiration 519, 555 calls on this opening bell and ringing that cash register. They were marked down $4.05 with a volume of 17,391 traded. The high was 11.15. It had a $7.05 range. Let it be known. Right here. And it's getting down in here where it's wholesale, and with the stock holding that 552.50 on a drop down and then heading north to 560, that makes a nice transaction here today for my option pit traders. So all of my option pit traders would be on that one. 17,000 contracts got whacked yesterday. Okay? And let us not forget the 560 call. Look at the high, 817. Look at the range, 592. Look at the amount of volume, 44,000 traded yesterday, MMT. All right, with that low of 225, closing off a hook there with the markdown of 315 at a 260 bid. That's the last print. Somebody bought it, created that move. But they're getting very deflated in the price range. And it's time for you to get paid. And one of the things that we're measuring is the pre-market gap. So when the futures gap up, as they have, they pull back. That's how equities will trade. However, this morning, the equities are exactly doing what the futures are in pre-market going into this opening bell. And I'm going to tell you that the markets have been slammed down, but once again, it's where they hit that resistance level below their key mathematical equation levels, where that sell program or that reversal engineering in price would take place. And that they're going to gap the 620 put down on the open, and we are going to hook this, and we're going to put bids out here right now at about $7.50 just to have it here. And that's what we're going to do. We're going to be looking at adding or breaking up based on this opening trend as to where these key reversals come into play. We'll be looking at where we limit out and limit in on the 615. And that's a 615 here. With the 615 call over here to my far left, and what we're looking at is, as a market maker that I am, when I short them and they go to zero, I walk away with the whole pie. It's all going to be based on the price range. Now, that's a different trade. However, that means that these puts were marked down significantly in the monthly expiration. And today, premiums will change within the monthly expiration. It's a monthly options expiration. And I just want people to know that the most important thing about the price action is how that bull has been coming back and fighting, but they seem to sell and the price volatility increases, meaning it doesn't matter. You get great moves off the bottom, but then they reverse, and you get great moves that way as well, my friends, because you do. Anyway, welcome to pre-market and the electronic gap sequences in play on these equities. And you can see that the gaps have been diminishing, but then the futures market are holding their price. And so equities will do the same as of right now. So yes, your futures have peaked. However, they have pulled back, but because the futures are holding that level, then that means electronically pegged prices will hold the same. Electronically, mathematically, electronically. And they'll have their ranges. Once again, I'm featuring that price line trade. Oh, that's going to be a nice one. Price line 655, 660 calls, they pay money. They were marked down and continue to stay down in the deflated area on these calls. And I tell you what, getting 100 contracts at the right time on this one, they pay about $70,000, and I'll show it live. Talk is cheap. That's on this one. Price line. So here's that 620 call that I may be selling short on Friday, or when it peaks. 370 was a high. So we're going to watch the common denominator, the mathematical gaps in the option pits, as long with the equity pit. So once again, it's live, and we open in 11 minutes. I will be giving limit orders out as they come down. You can learn to scale the support levels in the options here by having orders out like at $3.80 for right now, even though that you're gapping up in the price just in case he brings it down. So you could have 380 right here, and you can even buy, you don't buy the markup, but you can buy a $4.70. It's a markup to the last print of the previous day's close, just to make sure you get executed. Now, it doesn't have to be on heavy volume on that first entry. For new option market makers, you would just do, simply your 5 contracts. And you would make the market, and once you make it, then you would increase the volume to 25 contracts, so you'd have 30 of them. So when it goes $2 up, you make $6,000 debit. Ring, ring, ring. That's pretty good money compared to how people have to make a living today. And it's all about taking advantage of the market maker trading platform, the high frequency tape, and everything else. Pre-market futures, we teach you all of it because it's important for us. It's done live though. So, sometimes you may hear excitement in our voices. That's okay. We'll use that platform to gauge the sell gaps and the support levels and how the ranges are going to work. And I have all of the ranges here to prove it. Okay? Amazon has been a good trade. I'm telling you, it comes down, it hits the bottoms, and yesterday they shook it down nice on the short side. They really did. And Sina, the shorts are going to get squeezed out of here. That's when you're going to want to look at. All right, the price line, as I said, on the call side, I'll show you the call side. And this is live, and this is what us MMTs do in the morning in pre-market. We get all our tools ready, and we get ready, and we take a look over here at the 660 call right here. They still marked it down. 860, 1940 was a high. So it had to trade from 1220 up, and you would have got out. And then you'd be buying back down here at the lows. So the 660 call pays money. And so does this and I showed these yesterday. The 665 monthly 519 call pays money. 1550 on a high, 650 on a low, with the 730 print. It pays. Put bids out there right now at 470, even though that price line is gapping up now. So it's not going to go that low right away. They have to drop the bid and walk away here and drop it down where you would get executed on a net 665 call. And this is live right now at 6:23 a.m. And it's 5/16/2012. And it's pre-market. And we're going to go to the opening bell. And I'm concluding the pre-market with MMTs. And the thing about it is bull volatility and bear volatility both in price. And how these prices will increase the same distance in volatility. So you come from the lower range of 600 back up here, then you come back down in the trend, but you break that 600 at some point. That doesn't mean that that has to be today or even this week, but it would reversal intraday today from the gap that you would sell down below 611 down to right around at 607.75 area on a pullback is what we're going to be looking for here. So I'm going to conclude that for now, pre-market with live MMTs.